hope everyone had a really great weekend. It's Dave Santarelli from Santarelli Trading Exchange and BreakingChartAlerts.com. So guys, the most important topic that we could go over, I could see from the past few months here that a lot of people struggle with is position sizing, and in particular, position sizing with options. So tonight I made a little PDF file, as you guys could see in the background here. We're going to be going over this options position sizing, some of the rules that we go over with position sizing, trade management, and portfolio management. And then what we're going to be doing is I made a nice Google slide over here that we're going to be going over and comparing to one of our first trade challenges, the things that we were doing on a consistent basis and following our position sizing here. Okay, so first off, guys, the main goal of this class is to go over the actual management of a trading account and how to determine the size of your positions, as well as the techniques used to grow a smaller account here. So without further ado, let's get started with the presentation here. And if you guys have any questions, I'm going to answer some questions at the end, or maybe we could go over some Q&As after the end of each section here. Maybe after the PDF file here that we're going to be going over before we go over the slides. If you guys have questions, just let me know either in the trade room or you guys could post on Zoom or on YouTube here. All right, so let's get started with that. And let's see here. All righty. All right, guys, now you guys should be able to see my screen. If you're able to see my screen, let me know here in the chat, and we're going to get started. All right, thank you, Sammy. Hello, Robert, Sammy, Bill, Skyjack. Hope everyone had a great weekend here. All righty, guys, so first off, let's go over this PDF file. I shared it in the trade room at BreakingChartAlerts.com. If you guys go over here, you'll see right up above here, you'll be able to see, let me see, where did I put it? Right here. I shared that PDF file in here. So that way, if you guys want to save this and look at this on a daily basis, that'll help you out quite a bit here. Alrighty, so let's get started. I'm going to put this in, I don't know if I need to put it in present mode. It might look a little bit better here, but then you're not going to be able to see it as well. So I'll just keep it like this. Alrighty, so let's go over this now. Position sizing is extremely important. As some of you know, there's a lot of people that come, they'll start making very large trades, they'll blow their account really quick, and then they're out of the game here. Now, this is some of my rules to prevent that from happening here. All right, so let's get started and see. So first off, guys, you have to, as a trader, you have to understand that you first need to make realistic expectations. With options, your positions are much more leveraged than trading shares of stock. So we're able to look for about anywhere from a 2 to 5% average daily return on the account each day. Okay, and we could achieve this by waiting for the right setups, the trade plan entries, and that catalyst to help propel those trades higher or lower, depending on if we're getting those calls or puts. All right, so I'm going to go over a few examples here, and then we're going to jump into the techniques. So first, in this little section here, I want to go over what we're looking for. So that way you guys could visualize what you're looking for on your account each day, okay? So let's go over this now. So if you have a $2,500 account, and you put 12% of your account into a single day trade, below is an example of what we're looking for. I shared with you guys that depending on the account size, you're going to be looking anywhere from 7 to 15% of your account into a trade. Okay, because if you have a smaller account, obviously those options are a little bit more expensive. So to grab, one contract that might go up to, 10, 15%. Okay, so let's go over this now. So an example here, and I went over this with one of our students, Sammy, here when he was down here. And I'm going to be going over the details of that first trade challenge account that we did exactly this. So now an example is you have a $2,500 account and you're planning to put about 12% into a single day trade at a time. Now, what's important here is understanding you're starting with that 2,500. So if you're putting 12% into that account here, you guys could see 12% is going to give you about a $300 trade. So with that being said, 2,500 minus $300, now your account is down to 2,200 after initiating this position. You're making a $300 trade on some calls, puts on either one of the major ETFs or, you know, a particular stock. Okay, so $300 is 12% of a $2,500 account. Okay, so now let's see what happens here. So now we have $2,200 cash available and $300 into that day trade. From that $300 trade, our max stop loss on that is going to be 50%. You know, you have to understand 50% max stop loss or trade plan exits. And you guys are familiar with the trade plan, and that video is on here as well. If you guys need to go back, you could go to education tab on breaking chart alerts, go down to the lesson library and watch that video on the trade plan. So you have one of two stops with our trade plan while making these day trades. It's either a max stop loss of 50%. So meaning if you have $300 into a position, your max risk is going to be $150 on this trade. So even if you do have max loss on this trade of 50%, your $2,500 account is now at $2,350. Okay, that's really important. That's rule number one. 50% max stop loss or trade plan exits, you know, below that 10-day simple moving average or below the previous candle's body there if it's a shorter term day trade. All right. So now if we follow our trade plan here and let's say we make a 35% return on that $300 trade. Okay. And we close many of those out this week. So if we make just a 35% return on a $300 trade, that equals a net profit of $105. Okay. And what's really important here, I'm not going to be able to stress this enough. Too many people, they want to take that $2,500 account and make it into $5,000, $10,000 in a couple of days. You know, sometimes you're going to have trades that make those larger 300, 500% returns. And, you know, you really have a grand slam there. But I want you to focus on hitting little, you know, base hits or doubles here, you know, while you're growing your account. Because if you take too much risk on a small account, it could really destroy that account really quick here. Okay. So now, let's take a look. So we make $105 profit if we make a $300 trade and that trade makes a 35% return. So $300 times 35%, that's $105 net profit on that trade. Okay. Now, pay attention here. Your $300 trade is now worth $405. You sold for a profit of $105. After selling the trade for a profit, the account now has a balance of $2,605. Now, this is what's super important here. All right. Remember, you started off with a $2,500 account. You know, you started with $2,500. It's now at $2,605. So simple mathematical equation here is 2,605, divide that by $2,500. And that tells you that you just had a 4.2% return on the entire account. A 4.2% return on the entire account by making a small 12% trade that made a 35% return. Now think of that. That's just one trade and probably one that lasted less than a half hour. So I want you to get in the mindset of understanding that growing a small account is going to take time. You know, it's going to take a couple of months, but it's really important to follow that trade plan and be a disciplined trader for your entries and your exits here. So now again, we started with 2,500. It's at 2,605. That's an overall net return on the entire account of 4.2%. Now let's take a look at this a little bit further here. So there's 21 trading days per month. Okay. If you look for realistic returns of just 4% a day, you know, anywhere from 2 to 5% is good. Let's go over 4% if you made 4% a day, because in the example above there, just a small $105 profit just made you a 4.2% return on the entire account. So now let's just say what's a 4% return if you're just making one trade a day and growing that each day by just making one trade a day. And Sammy, when you were down here, this is something I stressed on you. If you're looking for those good trade setups, and you just make a small 4% return a day, even if it's not just one trade, even if you make like what do we make on Friday? 4 or 5 day trades. We ended the day in the green, even though we had 2 losing trades. And we still grew the account over 4% there. So what's important is looking at how you're going to do this, even if you just make 1 trade a day. Now, it could be a combination of just 1 trade a day, or if you make 5 trades in a day and your overall return is, over 4%, that's fine too. But like I said, let's just focus in on if we made a 4% average return on the entire account per day. All right, so let's go over this. So day 1, if we're starting with $2,500, we make a 4% return. Our account is now at $2,600. $2,500, multiply that by 1.04, that comes out to $2,600. Okay, so that's day 1, because I want you guys to get in that mindset, because let me show you something above here. Let's see where it is. All right, so take a look at this. This is why I'm stressing this to you guys, okay? So here was our trade challenge that we started off with in 2018. This is our very first trade challenge. We started with, I think, about $2,500, $2,600 the end of November. And as you can see here, December 1st to December 31st, here was all the trades that we made that entire month. And we were just focusing in on those trade plan setups, and most importantly, what had catalysts to move that stock or move that market. And as you can see here, when we started that trade challenge, we were just trading Diamond, Qs, and SPY for the most part. The other stocks we were trading were anything based on news events. So this one right here, that call on Boeing, we got that when it had that big drop after that I think it was a plane, one of the plane crashes that happened, one of the first ones. I don't know if it was the Ethiopian one or not, but it had that big drop, and then a couple of days later, it started to get a climb. We jumped in for a couple short-term swing trade from November 30th to December 3rd, and we got into that trade for $6.20. We sold it for $24.50. 24.5, divide that by 6.2. That was let me see here, 24.5, divide that by 6.2. That was a 295% return on that one single trade. It was only a $3,000 trade, but that $3,000 turned into $12,200, resulting in a $9,000 net profit. So when you wait for those setups that are catalyst driven, that's what gives you those larger percentage returns. That's why we're looking for those swing trades with those catalyst driven events. Day trades, any type of breaking news, we can make some day trades. Okay, but I want you to get in this mindset, because this is what we did for the entire month of December for that first trade challenge. And it's exactly by doing what we're going over here. Okay, so let's say day 1, we started with that 2,500, made 4%. So at the end of day 1, you're at $2,600. Day 2, that 2,600. Now you're making, like I said, you're making, so if you have a $2,600 account, 2,600, multiply that by 0.12. Now you're making a $312 trade. So notice how, that first trade, $2,500, 2,500, multiply that by 0.12. That was a $300 trade. Day 2, your account's at 2,600. Now, when you go to make a 12% trade, now it's $312 trade. So now you took that 2,600, 4% return, 2,704. Day 3, you're starting with 2,704. You make a 4% return. That account went from 2,704 to 2,812. So you see, you're starting off with small returns from 2,500 to 2,600. That's $100 profit on that first day there. Now on the second day, 2,600 to 2,704, it's $104. So you increase by $4. Now, 2,704 to 2,812, you can see that you're counting upwards $108 gain. So increasing by $4 or $5 each day here by incrementing your trades based on that, 12% rule there. So now you can see as you're going down and you're looking for those small gains with options here, you can see the account growing incrementally. Now, if we get down to day 21, you can see now you made a 54 and your account's at $5,477.82. And now if you make a, let's see, 5477.82, multiply that by 0.112. Now you can see how when you first started your account, you were making that $300 trade. Now your account's at $5,400. Now that 12% is up to $657 instead of $300. So it's really important to see here, depending on the account size that you have here, you're going from anywhere from 7 to upwards of 12% of your account on a single trade here. So it depends on the account size that you have. But how you grow a small account here is doing it just like this. So there's 21 trading days in a month. In that 21 trading days here, that you followed that trade plan and followed your rules for growing your account, you took $2,500 into $5,696.94. That's a net profit in your first month of $3,196.94. That's incredible. Think about that. You have $2,500 in your account. If you're able to be disciplined and just make those 1-2 trades a day and find those targeted returns there, you just made almost $3,200 in your first day. Yes, Stu, this class is being recorded. So you just made $3,196.94 in your first month with starting with that $2,500 account. Now you see here, you're making that 12% of your account here. You're targeting anywhere from 15 to 50% returns on those day trades. And that's what you're looking for. Small trades, they add up over time here. So now your entire account grew from $2,500 to $5,696.94 in your first month. You see this? $2,500 to $5,696.94 in 1 month. Now there's people that grow $2,500 accounts into 10 grand in a month, but that's taking on a lot of risk, and a lot of people are going to end up blowing their accounts by taking on that additional risk there. So with that being said, you could simply divide 5696.94 by 2,500, and you can see that the entire account for that month grew 127.88% in 1 month there. That's incredible. And let me show you this for a second here. Oh, that's not the one. Let me see, where is it? Okay, I gotta see where I put that here. Let's see. I think I have it on the other page here. We'll go over that. I'll find out where that is. But that's what's really important. You see how you're able to grow that $2,500 account into $5,696.94 by utilizing those types of rules for your position sizing. So that's position sizing. Okay, that's what I want you to do, is look for 2 to 5% average daily returns on just one trade at a time until you grow your account, until you double your account. I don't care if you're starting with 2,500 and then you take it to 5,000, or if you're starting with 10,000 and then you take it to 20,000. I want you to do that until you double your account. Then you can start looking at adding additional trades, because I want you to get in the habit of managing your trades before you start off with making 10 trades and then you can't manage them. You just can't. You can't watch all the charts at once. And then if you have a market driven event there and now all your trades are going down at once and you got to sell them, well, guess what? If that news is negative news and you're long, those are going to drop rapidly there, especially with options being leveraged the way they are. So start off by making one trade at a time. When you feel comfortable, you can get up to 2. And we're going to discuss that in a minute here, because you can make one day trade at a time, and then you could have a swing trade for that week, in the account as well. So you could have 2 trades, one of them being a day trade that you're micromanaging, the other one being a swing trade that you're managing on a daily chart. Okay, so with that being said, now let's go over to our class slides here, and we're going to go over this a little bit further in detail. All right, so first off, is there any questions here based on what we went over on that PDF file? All right, we'll go on to this next position now. All right, I'm going to put this in present mode, and I want to go over this with you guys. Alrighty, so this is a little presentation we made on trade risk and portfolio management. So let's go over this here and see exactly what it is we're doing. So now it doesn't matter if you're trading a small account or large account, those position sizing rules are going to stay the same. Okay, but the different types of techniques we use for trading are going to change once you grow that account. This shouldn't say 10,000, it should say 100,000. They forgot the zero in that, but it's a small account like 2,000 versus $100,000 account here. So let's say now you got a small account, $2,000, $2,500 or less. First off, I had one of our members here. They had a margin account, and they weren't able to make any day trades. Obviously, if you're considered a pattern day trader, you have to have over a $25,000 account. But you could get out of that there. You could avoid that pattern day trader rule by having a cash account with just calls and puts, which is level 2 options. And with that, it's going to be a non-margin account. So it's a cash account, level 2 options trading. And guess what? If you have a small account of $2,000, you're allowed to trade up to the max available for cash withdrawal each day, and then they have to sit and you have to let those settle overnight. So let's say you had $2,000 in your account. If you wanted to make 10 day trades, with each of those day trades being $150 each, you can make 10 day trades and still have $500 left over to day trade. So you can make those 10 day trades even though you have a $2,000 account. So having that cash account, level 2 options, no margin, avoids the pattern day trader rule. I helped Sammy get that set up on Friday. E-Trade, some of those brokers there, you have to understand they're new and they have no idea what they're talking about. Sammy will tell you, the guy says, oh, no, that won't avoid the pattern day trader rule there. And Sammy called me up and he says, Dave, they said that doesn't, E-Trade told me that doesn't avoid the pattern day trader rule. And what did I say, Sammy? I said, Sammy, put me on 3-way call. Let's call them up there. And the guy answered, and I said, yeah, one of your representatives gave one of my clients wrong information there about a cash account versus a margin account there. And Sammy will tell you, we cleared that right up there. They were sorry about that misconfusion, saying it was new people there. And then they said correctly that cash account there will avoid the PDT rule as long as you don't go over your max available for withdrawal in that account each day. And I could show you that in the background once we're at the end here. But I just wanted to let you guys know you could avoid that pattern day trader rule and make as many day trades as you want up to your max cash available for withdrawal in your account. All right, so let's go over this now. So a small account, $2,000 or less, you're really looking for anything 10 to 20% into a trade. If you have a small account, obviously, it's going to, a $2,000 account, if you put 10% in, that's going to be about $200, and most options there sometimes, especially if you're trading on Monday and Tuesday and getting that weekly expo, they're going to be expensive because you still have theta or time value, that's in those option premiums. So with that being said, you're looking for anywhere from 10 to 12% or 10 to 20% into a trade with a smaller account. So for example, there, if you have a $2,000 account and you're going with the mid there of 15%, you're making a $300 trade. So you have $1,700 cash in your account still. And the max you're going to risk on that $300 trade is how much? We just went over that. 50% max stop loss. So you're only risking a max of $150, or if you're following the trade plan, whatever exit comes first, 50% max stop, or that first candle below that previous candle's body, or below that 10-day simple moving average on a today 1-minute chart. Okay, so that's number one, 10 to 20% in a trade at a time, one trade at a time. That's what's really important here, guys. Make sure you're following that. It's just going to be one trade at a time there. Okay. 10 to 20% in a trade. So like I said, if you have a $2,000 account, put 15% in, it's going to be $300 in a trade. I want you to do one trade at a time. That's really important. Always quality chart setups over quantity. If you guys watched our day trade Friday on just this past Friday here, you know, we were live on YouTube. We did a couple of day trades. The first trade we made was a losing trade. We came back, we made a Q call, and we closed that out for about a 37% return. And then we made some other day trades in the afternoon session there, and we closed the day out for a nice profit, even after starting with that first losing trade there. So it's always about quality chart setups over quantity. You know, a lot of traders, you know, I'll look in their account, they got 25 trades open at a time. You know, there's no way as a new trader, you're going to be able to manage 25 trades. There's no possible way. So try trading one trade at a time until you double your account. When you double your account, by following the position sizing rules and then following, you know, the trade plan, once you double that account, then you could start making a couple extra trades there. But first off, to avoid risk, or not to avoid it, but to lower your risk, do one trade at a time there. And like I said, paper trade until you get a good feel and a good understanding of how you're doing it and show that you're doing it properly and correctly. All right. So again, number one, 10 to 20% in a trade at a time for a small account here. That's a small account, $2,000 or less. And then number two, one trade at a time. Number three, what we're going to do is use outperforming sectors. That's why every day we're going over the sectors. You know, we're going over the heat map, seeing what sectors are taking off. Let me show you guys this. Okay, here you go. So this is something that I love to look at here. Here's something from, let me put this, let me clear that off there, put this up. All right, so here's something from FinViz, right? This is something I look at just about daily. You know, you don't have to buy any of their services. Nothing else matters with them. They got some good free scanners you could use. But here you go. So if you're taking a look here at the morning, let's say 9:30 opens up there and you see, okay, the tech sector is really taking off there. You got energy climbing nicely over here. You know, you got, let's see what else. We got energy. We got some railroads climbing, communication services, entertainment. Disney was taking off. Technology down here, credit services, and credit services were doing great. We were going over some Visa, some Capital One, MasterCard, PayPal, you know, AXP, someone brought up there we were going over. So look each morning here, what sectors are taking off. These are all the major sectors here: technology, financial, consumer services, healthcare, consumer cyclical, consumer defensive, energy, real estate, industrials, utilities, basic materials. So take a look at this heat map every day and make sure that you guys are looking at this. Because if you want to day trade or make any swing trades, you want to go with the flow of the market. Go with the trend of the market here. So if you see communication services or tech taking off here, obviously we want to search and look for good tech, because if there's a lot of volume coming in there, that's going to follow our trade plan much more closely than something that's just pretty flat for the day. You guys know our consolidation areas and whatnot with our trade plan. What's really important is look for those stocks that are either A, having a nice breakout, or B, having a nice breakdown so we can trade some puts. Okay, so that's really important there. Take a look at that heat map each day. Okay, so use the outperforming sectors there as your catalyst. Okay, use those outperforming sectors, because number 4 here, market is news driven. Use our cycles for swing trades. So if you're looking at a daily chart, guys, you know what a swing trade is. It's a daily chart that we're looking at. If we're looking at a day trade, we're looking at a minute or 3-minute or 5-minute chart. You know, use breaking news for a quick day trade. Breaking news is going to be so important, and we're going to go over that in the next slide here. Okay, so that is your 4 rules here for trading a small account with those day trades. Use your outperforming sectors, one trade at a time, 10 to 20% in trade, and then use the market and the breaking news as your catalyst for the day trades. Swing trades, you're going to be using the cycles and breaking news on a daily chart. All right, so perfect example here of one of the trades that we made, a day trade, and this is a massive trade. We made over 300% on this trade. You know, you could see here, this was one of them that actually, you could see the October 16th expo there, you know, but it was after I ended up closing. So this was a Friday. And then Saturday, that option wasn't available anymore when I was making this class. So I had to go with the following week. But we ended up getting a shorter term trade there instead of that October 16th. But, we closed that out. And then when I did the class on Sunday, I didn't have that previous option chain there because it already expired. So I just went with the next week out here to show you guys in this class. But what I wanted to show you guys here, which is really important, is take a look at what's happening above here. So this is all of our news, right? So when we heard this news, Boeing forecasting challenging near-term aerospace market with resilience in long-term, update, Boeing market outlook for commercial aviation markets cuts total market value forecast for the next 10 years from 8.7 trillion last year to 8.5 trillion. And then you can see a lot of they're seeing opportunity because obviously they want to give some type of good news there. Oh, we got some opportunity to do this or that. But for the short term right now, they're forecasting challenging near-term aerospace market. So with that being said, at that 11:01 there, 11:01 is when this alert came out up here, right? And this up here, this is one of the news wires that we use from Benzinga. So you can see up here, this is coming obviously from Thomson Reuters. It's coming from Bloomberg. So you're seeing right here, 11:01. That's when that alert came in. Down here, you could see 11 o'clock to 11:10. This is the shaded area we have from 11 o'clock to 11:10. So now when you heard that news here, this is the opportunity you're looking for because look at what Boeing did. This is the actual Boeing shares. And then over here is those Boeing puts. So two totally different charts here. The one to the left is a Boeing shares on a today 1 minute chart. Over to the right is the Boeing options on a minute chart there. Okay, so you can see when that news came out there, here was that first initial red candle on that news. And then once that got onto CNBC and those other media outlets, it took a few minutes, right? Because we're hearing this news before anyone else. Okay, so after a few minutes and that news actually, got to the outlets, the media outlets, and other traders started hearing about it, look at what those shares did. They went from 174, 175, all the way down to 166. That's almost a 10-point drop there, an 8-9-point drop there in that short period of time, right? So now what you're looking at is that came in at 11:01. Here's where it started dropping. Now notice, here was that 10 crossing below that 20. Here was the MACD that already crossed back here. So with our trade plan, we're looking for 3 check marks as our confirmation. 3 check marks equal an entry into either calls or puts. So obviously, if it's breakdown momentum, we're entering into puts. Breakout momentum, we're entering into calls. So here's what these October 16th 172.50 puts were worth at 11:10 a.m. Okay, so even if we got in later here, up here when it was 11:03, let's take a look what they were trading at here, like right around 11:10. Once we really started seeing that breakdown. So 11:10 over here, these options were worth about $5.25, right? And that was for an extra week out. If you're day trading like we did on this that day, we made over 300% on that trade. So let's see here. Here is Boeing. This is the shares of stock going from 174 all the way down to 176 or lower, actually 165, 164. But let's take a look if we entered following our day trade plan and position sizing here. Okay, so if you had, if you jumped into these October 16th 172.50 puts, they're going for $5.25. That means one contract is going to cost you $525. Okay, now just a short term after this drop here, notice from 11:10 to 11:20, let's say where our exit was here. Let's just say our exit is going to be right after that 1020 cross below, after she broke above 167 there. So right at about here, you're seeing the MACD already start to climb. So your exit's going to be right when you're trading between that 10 and 20 here. So let's say right at around, 1120, 1127 here is going to be our exit. Our entry was 1110. So we entered 1110. Oh, 11:10, we exited 17 minutes later. Okay, so this is where you're seeing here. It got all the way up to $10.50, right? So that's a 100% return from that, down here, 525, at about 11:10, all the way up to that target of around 11:27, because we're looking at the stock, not the actual option chain that's over here to the right of our exit. So we're exiting right between 11.25, 11.27, which over here it's going to be right between $10 and 10.50. That's going to be our exit. And then as you can see, if you're closing out for $10, this was an extra week out. Like I said, we had that day trade, but $10, divide that by 5.25, 10, divide that by 5.25. That was a 90.47% return, even if you went with that further out expo that following week. So that's almost a 91% return on that trade. Okay, so I want you to focus in on why I'm going over this example. I'm going over this example here because catalyst market-driven news here is going to be your prime suspect here for an entry into a day trade. So if you're hearing a company like Boeing saying, hey, they got, let's just say they had a plane crash and you heard that coming in. Well, obviously that's major news that's going to affect that stock. So that's when we could enter into those puts. So it's really important to know why we're listening to this news. This news wire is going to give us a catalyst for those day trades. I want you to focus in on that each day. Okay, now let's go to that next slide here. So I want you to treat your small account as a baby. You got to protect it. You got to protect it and you got to grow it. Okay, so I want you to understand your targets and stops before entering into a trade. Now, I have something pulled up here that I wanted to share with you guys because this is a great little opportunity from Friday. Here is a perfect example here of an alert that we made. If you guys remember on Friday, I made an alert for those Q calls that we ended up jumping into. And let me see here. If I bring those up, let me see, out of QQQ. Here was that QQQ trade, right? I told you guys, if it got up to 358, we were going to exit. We ended up buying that for 95 cents, selling it for $1.29. So 1.29, divide that by 0.95. That was a 36% return on that one little single day trade. And notice the time frame from 10:58 entry to 11:14 exit. So that was what, a 16-minute day trade there that we made. In 16 minutes, we made about a 36% return. Okay, and that was just based on that nice breakout that we had, and then some news-driven events there. But if we held on to that, to our target, you guys remember we drew a target on our charts there while we made that day trade. I said, here's our target and here's our stop. And I said, guys, if you don't have time to, or this is what I actually said. I said, guys, if you're an emotional trader and that, you're going to get stressed out looking at that today 1 minute chart or that 3 minute chart there for those day trades, you could simply go up to E-Trade on your tools there, click alerts, and then you could put in your targets and your stops. So I went in and I put 358 as my target. And then I put a stop on there, I think of like 356 or something. And I said, guys, watch this. So when I get an alert now from E-Trade and it goes bing, 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 it's either going to tell me, hey, one of your price targets were hit. It's either going to be an exit or it's going to be a profit exit. It's going to be one of my targets or one of my stop losses. So that's what's nice about that. If you just want to make a day trade and say, okay, here's my target, here's my stop, and you don't want to look at that, E-Trade will do that for you. You just put in your, you put in your targets, your stops, and your prices there, and it's going to alert you once that stock hits that. It did that for us, and we made a nice gain on those Q calls there. Okay, so that's one thing I wanted to go over there that's really important with you guys is using that alert system there with your brokerage firm. That's really going to help you here. All right, now let's go over this. So know your targets and stops before entering your trade, and then look for quick 25, 50% gains on those trades there. A 25% gain on a $300 trade would be a return of 75 bucks. It doesn't sound like a lot there, but think of it. Patiently waiting for 3 setups like this per day will net you a profit of $225 per day. Think about that. $75 times 3, that's $225. So it doesn't matter if you have that small account there. If you're able to be disciplined and follow that trade plan, you're able to rack up those trades like that, and those small trades add up. $225 a day, that comes out to a week profit of $1,125. And that's from a small account there of $2,000. So that $2,000 account would now be worth $3,125. Okay, so it's important to understand you're not looking for those home runs of, $1,000 a day. It's those small $75 gains on that small account that's going to grow it, and over here, this is the actual example here of that, the trade challenge account, the first one that we had from December 1st to December 31st. That was an entire month there. We had one losing trade. And the thing with that is if we held that for another 15 minutes, we would have had a profit on it. But that's okay. We had one losing trade for the entire month. And you could see all we were doing was basically doing some day trades on Diamond ETF. You could see here the dates. We were in 1221, out 1221, in 1221, out 1221, 1221 in, out 1221, in December 10th, out December 10th. Here was that swing trade on Boeing because of that catalyst that we got. We were in November 30th, out December 3rd, and that was almost a 300% return right there alone. Here's another one, day trade, day trade, day trade, day trade. So most of them were day trades that we did on that first trade challenge. That's how we grew that account significantly, making small day trades in and out. And you can see there was, obviously as you grow your account, if you have a $15,000 account now, 15,000, multiply that by 0.12, that's $1,800 per trade. So you could see the size of these trades were anywhere from, $500, $1,300, $800, $600, $2,000, $2,200, $2,900, $2,500, $600, $3,600, $3,800. And those larger ones, you could see 1221 to 1224, they're the swing trades. Okay, so those swing trades, it's okay to add a little bit extra to them because obviously we're not going to have that time decay theta erode at that option premium as much as we will with a shorter term day trade. That's important to understand there. Okay, so again, that's what's important. Looking for those quick day trades with that catalyst being that news event or that news wire, and then those swing trades being that news event and something we think it's going to continue upward over the course of the day or over the course of the few weeks or downward if we're in some puts here. Okay, and don't try to double your account in a day and take that risk of blowing your account there. Too many traders, like you see, and you get some of them that are very open and honest in the trade room. They'll be like, oh, I put my whole account on that one trade there. And, and then I just lost, 15 grand. That's a gamble. That's not trading. That's gambling. Okay. So follow that trade plan and follow your position sizing rules. Okay. That's really important. So now let's go back over here. Go to that next slide. All right. So managing a small account. Treat trading as a business. Okay. Do your morning research. Sammy always asks there, and a lot of you other new traders always ask, what's your morning routine there? I gave him a beautiful morning routine. You're looking at your top upgrades, your downgrades, your price target changes, your initiations. You're looking at any type of breaking news that day. You're looking at unusual options activity. You're looking at those catalysts. So do that morning research there and say, okay, here's the top 3 stocks or the top 5 stocks that are really either A, moving in the pre-market hours, or B, have some type of news event that's going to trigger that stock to either break out or break down. Look for market moves. That's what I was just saying. Look at the upgrades and downgrades. Look at unusual options activity. Look at outperforming sectors and industries. What is the media pushing? That's really big. Just like we noticed Wall Street Bets, they were pushing some short squeezes there. Some stocks that had a high short interest, they were creating short squeezes by taking those out of their positions there. So obviously, if you have a short position and a lot of buyers come in, and now all of a sudden you're short that stock, meaning you're making money as it goes down. Now, if you got some people that are starting to buy, that's going to create something known as a short squeeze, because those short sellers there, what do they have to do? They have to buy back their shares there once they meet that margin requirement or have some type of margin requirement they have to sell that position for. So once they have that loss there, that stop loss for their account, they're going to have to buy back that short position, resulting in higher demand. Because if you already have people buying and now those shorts are covering their short positions and buying them back, now you got more buyers coming in all of a sudden, and you have something known as a short squeeze. So that's why we saw GameStop take off so much, and some of these other stocks, AMC, it's because they were short squeeze targets, and obviously you can make a lot of money doing that. So look at the outperforming sectors. What is the media pushing? And have a trade journal. Have your trade journal of your targets, your stops, your entries on each of your trades. Really important there. Next thing here is a perfect example of something that we were going over. Know your target and stops before entering your trade. Here was something that just had that 1020 cross, right? It just broke that 220 per share, and that was our entry. Our stop was, 223 a share. Our target was 240 to 250. That trade worked out beautifully. We made some profit on that. So that's what I mean. If you know your targets and your stops, you could go into your brokerage account and put in there, hey, alert me when the stock breaks above $240, or alert me when it breaks below 223. And then once you get that notification, that text, that email, or it pops up on your trading screen, you know that your target has been met. All right, so here's an example here. Let's say you took 15% of that $200 or $2,000 account there, right? So if we go over this and you guys take a look, we took 15% of a $2,000 account, remember? That was the example. So you had a $2,000 account, you took 15%, that's a $300 day trade. That $300 day trade made a trade that makes 45% return. So guess what? That $300 trade just made you a $135 profit. Now, here's an example. I always tell you guys, use your profits to fuel that next trade, right? Now watch what happens here. So now that first trade you made a $300 that made a $135 profit. Guess what? That next trade, we could double that. So if we made a $135 profit, our next trade could be $270. Why? Because we have a 50% max stop loss. So even if that $270 hits our max stop loss of 50%, guess what? You're still even there. You don't have a loss on your account. So it's really important to utilize the profits to fuel that next trade. Now, obviously, if you just wanted to use that $135, you could do that. Your max stop loss is 50%, $135 times 0.5. You have a $67.50 stop loss there. So that's important to understand there. That's really good way to grow your account by taking on lower risk. Now that 135 from the last trade, was part of the initial capital, 50% max stop loss. And then this is what's important. Always a 50% max stop loss on any trades less than 30 days out till expo, because those options could decay really quickly there with theta eating away at that option premium as you continue to get closer to your expiration. And this is another really important position or really important topic, guys. If there's no news, no volatility, don't trade. Remember, if you're trading sideways, that's no trade zone. You want something that's giving you that continued breakout off of those SMAs, either a breakout or it's breaking down and continuing to break down there. That's what you want to be focusing in on. When the stocks are going sideways, and you got no real direction there, you don't want to be trading that. You want to follow something that's following our trade plan and that's got volatility and that's got some news that's acting as that catalyst. If you don't have those, then you don't trade. It's really that simple. No news, don't trade. That's why, markets are open 9:30 to 4. Sit there like we did on Friday. We made 4 day trades and, we ended the day with a nice profit there. So just sit back and wait for any type of news, any type of catalyst, or whatever's going on with the markets to fuel that trade there. Really important. If there's nothing happening, don't trade. All right. Now, once you get to a $5,000 to $10,000 account, you can switch from a cash account to a level 3 margin account and work with spreads into your routine for consistent growth with lower risk strategies like in the money vertical spreads with lower risk and lower returns while still focusing in on your day trades. Okay, so now when you got your account 100 grand or more there, now instead of just doing calls and puts, now you're able to open up some other strategies, okay? Because some of these other strategies are going to take a little bit more money and a little bit more expertise. So now you graduated from calls and puts. Now you got a margin account. Now you got some level 3 options trading there. Now you can introduce spreads, butterflies, and special condors into your trading strategies. Okay, so once you grow your account there, now you could do some lower risk trade setups like in the money vertical spreads. And, you know, obviously, if you got a $100,000 account, let's just say you're moving, 8% on that trade. That's $8,000. Well, if you have an $8,000 trade and you're trading something like an in the money vertical spread there that's already got max value as long as it stays there or higher, well, guess what? If it's fully in the money there and you got something that's making about a 40% return on 8 grand, 8,000 times 0.4, that's a $3,200 profit there, and that's 3.2% of a $100,000 account. And that's with going with a deep in the money vertical spread that has very lower risk there. Much lower risk associated with a deeper in the money vertical spread compared to something that's out of the money or at the money. So it's really nice once you grow that account there, you could introduce some different strategies. So now here you go. Now we just went over a small account. Now, once you get your accounts a little bit larger of 100 grand or more here, now instead of making those, trades of, 10 to, 20%, now you could be focusing in on 3 to 5% of account on trades. So that would be on a $100,000 account, $3,000 to $5,000 on a trade. Okay. And if you're still looking for those, 25 to 35% returns there on a $5,000 trade, $5,000 times 0.35, that's $1,750 there on a day trade. So now you can see if you have, $100,000 account, you just made that quick 35% on a $5,000 day trade. You made a $1,750 profit. That's a 1.75% return on that entire account on that one single small $5,000 trade on a 100 grand account. So you could see, even though you have a $100,000 account, you're trading that smaller $5,000 trade. And then you're targeting your still 35% return and you're making $1,750. Now, if you make 3 of those a day, like Friday, we made 4 day trades. Let's just say you only make 3 a day. Now you just made $5,250 on making those 3 smaller $5,000 day trades one at a time there by utilizing 3 to 5% of your account on that larger account. Now, spreads, if you're looking for lower risk in the money spreads, that are looking for a quick 20, 30% gain, you could be looking for a 5 to 8% of your account into a spread. So if you have a $100,000 account, $5,000 to $8,000 on an in the money vertical spread, that's a little bit lower risk there, targeting that 20 to 30% return. So let's show here. Now, if we did that vertical spread and you're looking at $7,000 vertical spread, it made 25% return. It just made you $1,750. You're looking for spreads that must have strikes below support. Okay, they must. For a low risk spread trade here, you're looking for a stock that is that have strikes. This is the key word here. They have strikes below support on call spreads and above resistance on put spreads. Okay, butterflies, they're a little bit higher risk, so 2 to 3% of the account on butterflies. The nice thing with butterflies, you could really be targeting 200, 300, 400% returns if you're able to pick that that middle leg out properly there, something that it's going to pin at. Okay, now I want you to focus on 2 types of accounts here when you grow your account over 100 grand. When you grow your account over $100,000, I want you to have one account just specifically for day trading. And then the second account there for those longer term trades, or that you're buying shares and selling some covered calls against, or some high paying dividend stocks. Okay, so you got three things you could do with that passive trading account. You could just buy some shares and sell some covered calls against that each month and bring in that paycheck trade every single month there. It's like a rent check. Think if you own at least 100 shares of something, you could sell covered calls against that every month there and be collecting that premium. Not only are you making the difference between where you bought the shares and where they're trading at, but you're also bringing in money each and every month there by selling someone the right to your shares at a higher price than what you paid for them. So you got a couple of different options here with your passive account. Your active trading account, you're just sticking with your day trades with that. Your passive account there, that's where you're looking for those longer term growth strategies, your longer term positions, your longer swing trades. You're looking to buy shares and selling covered calls. You could be buying some higher paying dividend stocks, or you could be utilizing some, deeper in the money vertical spreads or some leaps. A leap is an option that expires longer than 9 months out till expo. Anything longer than 9 months out till expo is considered a leap. So with that passive trading account there, you're looking for those longer term trade setups, something on a daily chart that's just starting a new cycle formation. That's what you want to focus in on. All right, so now here it is again here. I have it pulled up on this screen. Here is your active trading account, and then here is your passive trading account once you grow your account over 100 grand. Active trading account, you're looking for trades 30 days plus, which is going to lower your risk. And then obviously, if you want to make some day trades, you could do that. But the trades 30 days out, that's for your swing trades there. Spreads on new cycles forming, 8% of the account. Calls and puts just for day trading. So you see, you're utilizing your active account for a couple of different things. You're looking for swing trades that are 30 plus days out till expo, and then you're trading spreads on new cycles forming. You could be buying calls and puts for day trading. You're following your trade plan and you're following your targets and your stops. 25% profit each month goes into your passive account. So let's say you made let's say your active account there, you have, let's just say, for example, you have $10,000 and you make $3,000 that week, right? So $3,000 was your profit that week. You're going to take 25% of that, which is about $750. So $750 you're going to put into your passive account there, because this is going to be your longer term growth account here that, you're going to be using either for, you could use for your retirement. You could use for, anything you have to pay for in the future, a house, car, boat, yacht, whatever this you want that for, that could be that. But I want you to understand that active account there, once you start growing that nicely, start putting in 25% of your profits each month or each week into your passive account there. Okay. That passive account, you're only looking at the end of each day there, seeing if your targets are hit. You're not worrying about intraday volatility or, 1 minute charts there. That passive account is just for swing trades. Active account is for your actively traded stocks and options. All right, so here's another good example. This is another nice little chart that we made here. This is a small account. This is options trading, and this is a large account. So here's a little comparison here. These are the different types of strategies that we could use, right? And the percent of capital per trades. So account $2,000, you're looking for 10 to 20% of your trades going into calls and puts. One trade at a time. See over here, max number of trades, 1 to 3 trades at a time there once you grow your account. 10 to 20% of your account, calls and puts. Over here, small account, you're not trading spreads. You are not trading butterflies. Max stop loss, 50%. That's going to be the same for both. Number of accounts there, 1 account. Your larger account there, you could have one for, your vacations. You could have one for your retirement account, but those are going to be your swing trades. Now, again, going into calls and puts, once you have a larger account here, you're going to go 3 to 5% instead of 10, 20%, because those options there, they're going to be, obviously you're going to be able to fill those much more. And you don't want to, have very high volume going into a lot of those stocks, especially if the open interest or volume is down on those. So 3 to 5%, and you're going to be focusing in on those ones that have larger volume coming in. So you can have more liquidity on those exits. Okay, so small account, 10 to 20% calls and puts. Large account, 100 grand or more, 3 to 5% of the account on calls or puts for those day trades or swing trades. Spreads on a larger account, 5 to 8%. So anywhere between $5,000 to $8,000 into an in the money vertical spread. Butterflies are a little bit higher risk there. So you're only trading 2 to 3%, because if they pay off there, those butterflies are usually something that gives you those larger returns when you find a stock that's going to pin at a certain strike price. So 2 to 3%. Max number of trades at a time for a larger account. Obviously, if you grew your small account to over 100 grand there, now you could be taking on a couple of more trades, 5 to 7 max. Okay. Max stop loss stays the same for both, 50%. Number of accounts, once you start growing your account there, you'll see those grow really quick there. You could open another account there if you want one for, a college fund, a vacation fund, a house fund, or a retirement account. But that's what you're focusing in on. Your active account, you're going to have one of them that you're actively trading. Your larger account, you're looking for swing trades of new cycles forming with that trade plan. All right, so that's going to end that slide and that presentation. If you guys have any questions now, I would love to go over that with you guys. And let's see here. I think I had a couple of pictures brought up here. So here was some of our trades this morning or on Friday here, October 1st. Here's the Q calls we got into, 95 cents out at $1.29. And this was trading the trade challenge account here. Let's see, 101. Here was our entry for the SPY puts. We got in 51 cents out at 60. 0.6, divide that by 0.51. That was an 18% return on that trading. Look at how long that lasted. From 12:59 to 13:01. That trade lasted literally less than 2 minutes. 2 minutes in that day trade made us an 18% return. It's not big, but like I said, 18%, if you're locking in those profits on a consistent basis, you're going to grow your account nicely there. So let's say, what do we get there? 15 contracts. So 15 times $51, that was a 15 times 51. That was a $765 trade. So we took $765 and turned that into $900 in that one trade there. So you see, you're just making a couple of those trades a day and you could grow that account really nicely. Now, here was the next one. We were in at 20 cents, out at 28 cents. This was at the end of the day here. We were in at 15.19, out at 15.27 in that trade for 8 minutes. And in 8 minutes, 0.28, divide that by 0.2, we made a 40% return on that day trade. So we had 15 contracts. 15, multiply that by 20, that's $300. That $300 was then worth 15 times 28, 420. So you made $120 on a $300 trade there. 20 times 15, yep, $300. So $300 was your initial entry. You paid $300 for that trade. When you closed it, 28 times 15 is $420, $120 gain on that trade challenge account there. So that's what you want to be focusing in on. And even though you're going to have some losing trades, if you follow that trade plan, by the end of the day, you should have some nice profits. And if you're having some losing trades or you're having larger losses, obviously you got to be looking at your position sizing and you got to be understanding exactly, let me see, bring this back up. Position sizing rules are looking for a quick 2 to 5% average daily return on your account. Up to 12%, I'd be going with on a $2,500 account. So that's going to be $2,500, 12%, $300 trade. You're looking for those quick entries in and out, and this is what you're trying to do with your account there. So I posted this in the trade room for you guys. Print this out and look at this each day, because if you're okay in your head, mentally prepared for $100 profit per day, look at where you take that 2,500 by day 21 here, because there's 21 trading days, by targeting those smaller returns there. Targeting those smaller returns, you're taking that 2,500 into $5,696.94. And over the course of the month, that's an overall return of over 127%. So it's really important. And this is what we're going to be doing a lot this week here is looking for those catalysts. If we find some good day trades on Monday, we'll jump in and out of them. You know, if we find some good swing trades for that week, I think it's going to be a great week for trading, to be honest with you. Everything's looking good. COVID cases are dropping. So if that's the case, we'll be looking for some swing trades and also be focusing in on some day trades as well. So if anyone has any questions, let me know here. Other than that, this is going to be recorded. It's going to be posted on the website. I'll post the link in the trade room. And if anyone has any questions, please reach out. Let me know. Other than that, we're going to be live on we will be live on YouTube tomorrow morning, and we'll be live on Zoom trading. So let me know if anyone here has any questions. If you do, we can go over those now.